Top of the morning there, traders. It was a little bit non-decisive action last night after following the Chinese GDP figures, which many were expecting to be surprising in one direction or the other, but they came exactly in line. I believe at 7.4%, and most of the other information was pretty much on the mark. This has led the markets to consolidate overnight, and it looks as though if we look at the 4-hour charts, that heading into 9 a.m., we could have some key reversal patterns showing on the 4-hour charts, but we'll have to wait to react to those until the 9 o'clock Eastern time. We also have initial jobless claims reports coming out of the USD at 8:30, and I believe we have Philadelphia Fed also this morning. Let's get right into it and take a look at the majors. As you can see, the EURUSD, after basically driving higher for a good portion of this week. Let's see where we began this week. We began right about here at the lows below the fib levels. It broke up to test the 50 fib, and we had a strong daily price support, and the pair has continued to move higher. And if we look on a daily chart, we'll get a better picture of what's going on here. Excuse me, what's going on here. The cross is now firmly above the 50 fib, and it looks like it's looking to test the September high, which came in at 131.70. At least it looked as though. But the cross hasn't been able to gain the momentum and is now currently sitting really just about mid-range. And it's key for the pair to stay above the 131 level. If we get a break below that, we could see a push lower. But heading into today's trading, it's all going to be about staying above or below. It's all going to be about the highs right here around 131.26 and the lows right down here around 130.83. A hold or break of these levels could dictate today's price action. A break above the highs at 131.26, we could see a push up to the high that we just spoke about at 131.70. A break below this 130.82 level, and we could be on our way back to the towards the 50 fib at 129.86. So we're going to put these. I'm going to put these on my chart right now, so I can take a look at these levels throughout the morning and try to get in and trade at these prices. Now let's take a look at the other pairs. The Great Britain USD. You can see even after retail sales came in better than expected, this pair, as usual, has found the way to. The Great Britain USD cross is the king of the false breakouts. This pair has found a way once again to do the most damage to the most people, and now you can see that the pair is once again below the descending trend line that has capped the price action around, so let's just say around 160.140. As long as the pair is behind that, it does favor a move lower. The initial move lower would be around to 160.81, followed by the 160.50 level, and yada yada yada, so forth. Ultimately, the cross would still be looking for a move back down to the 0.382 fib at 160, but now this could easily still reverse. We'd have to wait for a strong 4-hour close below this level, and I'd be looking for a break of that low right there in the last 4 hours at 161. Let's move that trend line down there to get an idea. At 161, let's say 161.15, that's the price to watch. If we get a break of that, we could be on for the push lower, and the same being with the top of the range. We just want to see a break of that range at 161.77, and we could see could be off to the races, the upside. Now you have to realize with these levels I've showed you right here, in the last week or so, we could easily just consolidate between those levels all day. So you have to keep that in mind. And but this is turning out to be a nice bullish 4-hour reversal candle to keep your eyes on. The Aussie USD, similar aspect. It's still just consolidating around the 50 fib. It looked to be breaking higher. We have a lot of convergence on the charts here. Let's just look at the RSI, insert price indicator, RSI. Okay. If you look at the RSI level, actually, it's very well overbought, and it looks like it has broken. Let's see if it has. It's an interesting. This is an interesting chart right here. It looks like it is definitely an overbought territory, and it has broken below the ascending trend line on the RSI level. So it could be. This could be a legit reversal. We're seeing right here. What we'll have to do is, let's get rid of that. what we have to do is watch this price action right here, or you could right here, right now, well, when you watch this, I'll post this on, well, you could go short, but you'd have to place your stops above here at 104.10, so maybe up in the 104.20 area, looking for a move down to the 103.25, 103 area, 103 area. That'd be a very interesting trade to watch into the 9 o'clock Eastern close. The New Zealand USD looks to be rolling over also after popping up to the 50 fib and didn't quite make it up to the price resistance at 101.8235. This is definitely a bearish triangle. Any move lower though will find resistance staggered starting at the 0.382 fib down to the 50 fib at 0.183. The USDCAD, this pair has been consolidating in a major fashion, but if we want a better picture of what's going on, let's look at the daily chart. On the daily chart, the pair is basically just in a range. The top of the range is at 98.85, the bottom's at 97.38. We don't need this in the middle. So until we break out of this range, consolidation is the key. My guess is that the pair is probably a little bit oversold at this level, and we could see a bounce back higher. The USDJPY disappointing at best because went long at 97.90, set the stops at 97.70. Move down to basically touch the stop and then reverse. As is the case, though, I probably should have set my stops a little bit lower, around the 98s, below this level, over at 98.55. Looking for a move higher. But I didn't. So such is life. There'll be other trades that'll come back to you. The EURJPY, another interesting trade. We went long this cross with the EURJPY. We went long this cross right about. Actually, I think it was the odd JPY we went long. Right about at 102. And excuse me. So we went long this cross, and it looked as though the trade was promising. And we went, I think it was about 102.96. It was right about here. And if you're still in the trade, you sure should be up about 95 pips right now. I think I moved my trade down to break even, which was at that 193.96, and it literally just came down and touched it. Same with the yen pairs. That's the difference between having a great week and a break even week, which is very disappointing. So the pair is up 100 pips now. If you're still in the trade, because I think it still is a trade set up, if you're still in the trade, you can see right here, right now, it is at resistance. So this would be an opportunity to sell this position to take some of your profits. But the targets, if I believe correctly, the biggest target would be the 0.618 at 104.79. So you might want to keep that into mind. So you should definitely be at break even now, but you should have staggered a little bit of your trades out of there. The Aussie JPY still moving higher after breaking the trend line. There's no real trade that I have here at this moment, but if you are long, you could be looking for a move up to the 83 level. New Zealand still playing the resistance and support levels, and the resistance and support levels. It's in the resistance zone between 65 and 65.50, and this pair has seriously been consolidating. It's going up on yen straight, so we could see a reversal relatively quickly. The CADJPY is testing the top of its range, and it could we could see a bit of consolidation at these levels. But if we do get a break, and we'll have to watch this we'll move to a 4-hour chart. If we do see a break of this level, we could be off to the races higher. It's initially targeting on the 1-day chart. Let's go back to that. Initially targeting a move up to, we have to actually scan out because I know this has been consolidating for eternity, it seems like. We could see a move up towards the 83 level in the long term, but initially your target would probably be about right at 82, right here, right there. Great Britain JPY continues to move higher, broke above the 50 fib, and if we looked at on a daily chart, you can see that the target on that would be a 128.80 level, which would be the highest from September, and you should definitely be break even now with your stops move down to the 127.46 level. Let's look at the Great Britain JPY cross. It's actually honestly not one I've looked at in a few days. I'm curious to see what how the price action is reacting on that. Okay, apparently I don't have it as one of my choices on the chart anymore. That's very strange. Alright, well, I'll check that and send it out on the Twitter feed. So basically what we're looking at going into today's trading is we're watching the 4-hour candles on the euro, the pound, to see if we get a close below this descending trend line. The Aussie, to see what happens with the 50 fib right here. New Zealand, I guess that does look like a nice reversal. The CAD, we're watching the price action between the resistance zone, blah, blah, blah. And the USDJPY continue to move higher. If you're still in that trade, so your lows stops lower than mine, we're going to be targeting the 79.65 level, followed by the 79.80. The EURJPY, we're watching this price level right here. We're at the top of September's highs. We could see a reversal there. If we break higher up to 0.618 fib, the Aussie, no real trade there, looking for 82, then 83. New Zealand resistance, CAD, right at 0.618 fib. Great Britain JPY looks like it's going to be charting 128. All right, it's all about the 4-hour closes at 9 o'clock Eastern time. Everybody, good trading. Let's make some pips.